place. The smaller CDC, which was coastal, was about 45 million in loans. Where at the time we were about 110 million. So now we're over 150, and that gives us some economies of scale that we didn't have before. And I told you right before we went on, we're also merging with Mid-State Development out of Bakersfield and Kern County area. So that'll put us over 200 million in loans by far, like 240 million in loans. About a portfolio of about 450 loans at that point. So we finished the first part with the SBA last week or 2 weeks ago for Bakersfield, and then we're in the state part right now. So hopefully it'll all be done by December for approvals, and then sometime in January we'll take them over. We've agreed to maintain staffed offices in both places, just no executive directors. So that saves a lot on overhead, and we'll focus on. And like a lot of CDCs, we do have remote people now. We have staff in Kentucky as well, just underwriting and servicing people. So,
let me interrupt you there for a second. Hey, Michael, can you start the YouTube stream? I know Michael's still trying to get John Reosti on, and I'm looking over. I don't see us on YouTube, so let Michael.
We should be live right now on YouTube, actually.
Are we? Okay, cool. All right, good. Tell me about the economy. What's happening? How does the economy? Tell me about the economy.
Well, in Central California, we're like Lance and I were talking. We're much more like the middle of the country. We're very ag-based, very rural.
Yeah.
So we don't soar like San Francisco, especially Silicon Valley or LA does when the economy's hot. Nor do we bottom out like they do either. So we're more steady, and. But we're still part of California, which is great benefit that we can be so close to the Bay Area and Southern California. So our economy is pretty stable. It did help that we finally had a wet year this past year. We had 3 years of drought, which for most parts of the country that's devastating immediately. Ours are slower because we have reservoirs and stuff like that. So most of our farmland is irrigated, not.
Frank, you sound bullish on California's Central Valley economy in 2024.
Yeah, we're doing okay.
Good.
Yeah,
we're not in any of the major disaster zones, so we don't have the fires directly in our market, or the other stuff that happens. So steady, we're steady.
Well, good. Well, it's my old stomping grounds. And you mentioned, how far are you from San Francisco? How far is Fresno from San Francisco?
About 190 miles.
Yeah.
So 3.5 hour drive or so.
Yeah, it's very
good. We're 4 hours to LA.
I'm going to shift the conversation a little bit. I know you just got back from NADCO, National Association of Development Companies, talking about 504 last week. You're our scoop us. Give us what happened. What happened? What do we need to know about?
Very well attended meeting. We sold out, and there was the hot topics. Obviously, were some changes. Diana Seaborn is not with and heading up the SBA program anymore. She's still with the SBA, but not the head anymore. And that's going to be an interesting change to see who they replace her with. We're fighting with compliance issues with for the first time that they've had that. Due to the idle loans and PPP, they were not. They launched the compliance to kind of get rid of some of the fraud that happened.
Yeah,
maybe swung the pendulum a little too far, but a lot of our deals are being held up, and we've actually lost a deal. I'm probably going to lose the second one because the idle thing can't be resolved, and doesn't appear to be fraud, but a lot of our customers have multiple affiliates, and we CDC still have to really collect all that information, even though we don't submit it all the way a 7A lender does. But I don't think the issue is with our actual client. I think it's with an affiliate, and so they're being blocked on that. But they started it, and then they really didn't have a process the way 7A does for getting it resolved with their own website and all that stuff with idle and PPP people. Most of the stuff is idle related, not PPP.
Yes. Lance, jump in on that. I know you've been doing some
research. I just know, Frank, I don't know if this makes you feel better, but the 7A lenders are a little frustrated as well with the error codes or the codes that are coming out when they submit a loan for processing. And I think SBA is working hard to get it ironed out. But, I've heard stories, Frank, of 7A lenders who submitted loans, got an error code, couldn't figure out what it is. Eventually, we actually got a release on what it was. And then they tried to submit additional information, but they ended up losing the deal as well. I know SBA will get this ironed out and get it working smoothly, but it's like any big change. It takes a little time to work properly.
Right. Yeah, exactly. And I 100% agree that SBA is working hard to resolve it. Their staff attitude has been great and stuff about it, but I feel bad for the customers because a lot of this stuff is kind of silly that they may have had a slow pay or a missed payment just because they changed bank accounts or something, or the information could have been inputted wrong. And they're being punished more than somebody who filed bankruptcy 10 or 15 years ago. And that doesn't seem appropriate.
Well, and this is not an issue that, until SBA gets it smoothed out, it's not going to go away because, having worked a huge number of PPP loans and getting exposed to, you look at customers, I can't tell you the number. When I look them up, they had a PPP loan, first and second draw. They had affiliates that had first and second draws. They had idle loans. If they're restaurants, quite often they throw in a restaurant revitalization grant, and a lot can potentially go wrong in submission for a new loan when they have all that.
Right. Yeah, that's 100% right. We see that with banquet halls too, people that have done big event centers and stuff like that too. So it's been pretty fun this year, but it'll get better. It's getting better, and it will get even better next year.
Hey, Frank, give us an outlook for, you did a great job in telling us California and Central California economy. What was the consensus from the meeting on 504 lending in 2024? Have the higher interest rates impacted that program, and to what extent?
In some markets, yes, very much it's impacted. Well, overall, it's impacted, yes, nationwide. We moved basically more than double rates. I mean, I had clients that had like 1.9% fixed rate for 25 years, a couple of years ago. And
I'm sorry, I'm going to cut you off. Say that again, please.
I have 4 clients with less than 2% rate.
I love it.
On the debenture side, that's incredible.
On the debenture side, right. And so, but still, I mean, we went from 2 years ago, we were at 3%, basically 2.9, and now we're at 7. We were at 7 and almost 7.5 last month, but this month's rates were a little better. They went back down to like 6.9. But I was thinking we're going to get to 8.5. The consensus at NADCO from our market makers and stuff is that it's not going to go down until next summer at the soonest. So, but it's not going to go up much either. So it's kind of, we're hitting the top, and it's not as bad. Across the board, our market folks that talked to us were saying that everybody expected it a year ago to hit 9 and maybe even 10. And it doesn't look like we're going to get to 10 for sure, and probably not 9.
Tell me about debt refinance. How many people are taking advantage of that program?
Great topic. That was another hot topic. Yes, a lot. We've done more than in the last 3 months than we have the last couple of years. We were a little slow to get into debt refi on our end, but and then SBA's relaxed the rules a lot the last 2 years, and even more so this year with allowing us to refinance 7As. Because, boy, as a matter of fact, they're even encouraging us. And hey, you got clients that are prime plus 2.5, and they're paying over 10% now on their 7A loans. And there was a lot of talk about making sure we knew what we could and couldn't do going forward and how to resolve some issues. So the information is better and it's more consistent across the board. And we expect to be doing a lot more. And they made
so no pushback from SBA on refinancing 7A loans. What about cash out? How much cash are they able to take out of their properties?
They can do about, I think it's 15%. Don't hold me to that, but I think it's about 15% of the project. The big concern is knowing what the original money was used for, documenting that it was for the real estate and business purposes, and then we can look at adding money after that. And so they were just the clarity of the rules going forward was much better this last week. So we're very excited about next year for that. In my opinion, like Lance is probably that when the economy gets a little tougher overall, us in the CDC and SBA world should be, doing better because the banks should be relying on us to share the risk. So when somebody Granted, 2008, 2010, it was pretty crappy, but by 2011, we should have all been doing a lot better because the banks were still a little bit weary, going all in on deals.
Michael,
Absolutely.
I see you. Welcome. You're on mute, Michael. I don't know what.
Oh, sorry about that. So unfortunately, I think we figured out the problem. I think we have to update John's version of Teams. So unfortunately, John won't be able to join us today. I can try to maybe get him on a phone call, but as far as the Teams account, Teams and Teams apparently don't match up for whatever reason.
Well, we only have a couple minutes left, so tell John happy Thanksgiving, and we'll see you next Monday.
He's actually on as an attendee, so he can hear everybody. We're trying to get him in the sneaky way.
We will speak kindly of John. Ask him, John, do you have any questions of Frank that you, is there a way, bring him on real quick. Can you bring him on real quick?
I tried to. Let me give him a call, see if I can do that. But there is a Q&A function that if anybody has any questions, please, for Bob, Lance, Frank, go ahead and put your questions in the chat, and I will get them to all three of them.
We have no questions yet. We're still learning.
Yet.
One thing.
Go ahead, Lance.
One thing about 504 debt refinance we were talking about, Frank, and the fact that you can refinance an SBA 7A loan. So those of us who manage SBA 7A portfolios have borrowers who may have had an SBA loan at, say, 6% when this all started, and now their loan's at 10.5%. And you're probably finding some SBA 7A servicers who are saying, hey, you've got a real estate-based loan. Why don't you go talk to a CDC and get a 504 loan on your project and help your overall cash flow? So debt refinance with 504s, I think, is still an outstanding opportunity for any SBA borrower or small business that has real estate.
That's absolutely correct.
Hey, Frank, I know that as NADCO years, it's been almost 10 years, put out new 504 compliance rules. And you and I haven't talked about this, so it's maybe a curveball from left field. But what are the responsibilities a lender should consider when they're asked to be on the board of a local CDC?
We require, it was SBA to put the new rules on us about 12 years ago. So back in 2014, they launched a whole series of new rules, post real estate crisis time. So basically, we need to have bankers on our board. We have 5 out of our board members are bankers, and because they feel like the bankers are the most in tune with the market. And so the only rule is, they go through they almost are like a borrower. They go through the whole background check and all that. But they also there's very strict rules about abstaining on not even being on the call when we have loan committee and their bank is involved in any way, whether they're being paid off or they're participating. So other than that, it's pretty much been pretty easy, and we all need bankers to be doing that. But sometimes what's kind of crazy in today's world with the bigger banks is that their compliance can throw up a deal saying they want more information than ever from us before they clear their employees to join our CDC board. So
what are your thoughts about that, Lance?
Well, my primary thought is, yes, CDCs absolutely need bankers to participate on their board and be involved in the credit decisions. I don't think the rules are overly, oppressive in terms of bankers joining CDC boards, but I think they're a great add-on to the board of directors of any CDC.
Very good. Great. I love the conversation. Hey, just a couple seconds left. Lance, you're going to be doing a webinar next week on difficult servicing problems. We released the NFIB this morning released their 50th year anniversary issue. Said 2% of borrowers have severe credit issues. 5%, that's their number one challenge. 22% said their interest rates have risen.
Well, Bob, any small business borrower has seen their world change dramatically over the last 18 months. And particularly SBA 7A borrowers. I don't think anybody, we all saw interest rates earlier in our career. I've told this story, and Bob, you know it. First loan I did, SBA loan, was 21%. We don't have those kinds of rates, and 10.5% looks pretty good, but it doesn't if you were at 6% when you started, and all your projections were based on 6%. So
forget 6%, Lance. How about 1.9%? I'm still getting over with rates.
Yeah. But there's more stress in SBA 7A portfolios, and as participant lenders, we have to understand how to work with those borrowers, what to do if they default. And what we're going to talk about in this webinar are different servicing actions that can be taken that either help the borrower or help protect the participant lender in the SBA. Things like workouts, offers and compromise, different servicing actions, collateral releases, guarantor releases, assumptions will all be covered in this webinar. Every participant lender that services their SBA loans needs to be a part of this webinar.
Great. Hey, Frank, I appreciate you coming on and telling a story of what's happening. I appreciate that very much. I'm checking the YouTube channel. Looks like that's working. We have some people there. Hey, do me a favor, subscribe to the channel. We appreciate that. And everyone, have a nice Thanksgiving, and thank you for joining us today for Coleman Report Live and for supporting America's Main Street, one entrepreneur at a time.
Happy Thanksgiving.
Happy Thanksgiving, yes.